CNBC presents Power Lunch with Bill Griffith and Michelle Caruso Cabrera.
We're talking about something called a managed account. It's a kind of a mutual fund, but not really. And joining us to talk about the advantages and disadvantages, we'll take your questions about them. Mark Brown back with us, certified financial planner and partner at Brown and Tedstrom. Good to see you again. Welcome back.
Thank you, Bill.
Define managed account.
It's essentially a mutual fund account, but instead of owning a fund share, you own the individual stocks or bonds yourself, and it's being managed for you.
On a discretionary basis? I mean, they have full discretion of what to invest in?
Just like a mutual fund, they're buying and selling every day like they normally would.
Normally, these have been for high net worth individuals, as they are known. Is that still the case?
That's the neat thing about it. Because of technology, they've been able to drop the minimums to as low as $100,000 per manager.
So, from an individual, or they pool that much money to a manager?
No, per individual.
Okay.
So
it is still relatively for high net worth individuals?
Sure, it's not for a $2,000 IRA account.
Do they normally, they take a little higher risk though, in some cases?
We found when we looked at them is that when you x-ray a mutual fund, you'll see maybe 100 positions. In a managed account, because of the way they're doing it, they might have only 30 or 40 positions. And because of that, in a mutual fund, you might not have more than 5% of one stock. In a managed account, you might have more than that, maybe 10 or 12. So if it make a good pick, it works out well. If they make a poor pick, then of course it doesn't.
Let me ask you, get to the phone calls, so I don't want to step on these questions from the viewers, but who should look to perhaps think about a managed account, in your view?
I think someone that is very sensitive to taxes. You have a much better tax control in a managed account. Someone that has over $1 million to invest, where they might be able to allocate some money to a managed account, and people that want to customize their account. Maybe eliminate the sin stocks like liquor or tobacco, or make it very green.
Okay. Let's go to the phone, see what people want to ask you. To Larry in New Jersey. Hi, Larry.
Hi, how are you?
Good. What's your question?
I have a two-part question. Providing that you have identified the right investment strategy, how does someone conduct research to determine the historical performance of the person or individual or firm that's running the managed account? And the second part of the question is, what is a typical range of fees for having a managed account?
Very good question.
Good ones, yeah. Well, the top 5 broker-dealers represent about 70% of the managed account business. So if you go, you can find it through those firms. And the discount brokers are now just getting into it. So I wouldn't say it's as transparent as, say, the mutual fund where you can go to Morningstar or something like that.
These are something like hedge funds, to speak of, which are unregulated by the SEC to this point, and you don't get that kind of transparency.
You don't, but if they're going to represent a track record, it still has to be audited.
And what about fees?
Fees are going to be about the same as a mutual fund fee for the lower account sizes, but it can be much lower for higher accounts. So say 200 basis points down to 75.
200 basis points of the size of the account that you have individually.
Right.
Right. Per year.
Per year.
Okay. To Stephen in Florida. Hello.
Oh, good afternoon.
Yes, sir.
My question is quite simple. Is there a rule of thumb for holding onto a manager if his style, for example, aggressive growth fund, which is out of favor now, has gone down, let's say, 33% in 16 months?
Yeah, how easy is it to get out of a managed account if you need to?
A managed account is just like selling stocks. So you'll have to work yourself out of the stock account. It's not quite as easy as a fund where you can make an 800 phone call and be out in the same day, but you essentially could say, sell all my stuff today.
And what about this philosophical question he's asking? If the style of investment is out of vogue, as aggressive growth seems to be right now, do you get out of it, or do you use the buy and hold strategy and wait for the cycle to come back again?
I think all different asset classes and styles have their day. So as long as you're diversified and you're not over allocated to any one asset class, you should hold on as long as you think the manager still has. You have conviction in the manager, you still think he's a smart guy.
Are these accounts allowed to use leverage, as they say, options or futures in the mixture with the stocks that they invest in?
No, not necessarily. I mean, then you're talking a little bit more like hedge funds, and certainly there are hedge funds that are managed accounts, but usually they're straight either stock funds or bond funds.
And the front line, how people find out about these accounts? You call your broker? As you said, a lot of brokers are getting into this.
70% of the new business is coming from the 5 largest brokerage houses, so call your broker.
Very good. Mark, always good to see you. Thank you.
Thank you very much.
Mark Brown, certified financial planner and partner at Brown and Tedstrom, joining us today to answer your questions about managed accounts.